All right, traders, a very warm welcome. I am Devang Mehra from the Financial Analyst, and I welcome you to our YouTube channel. Thank you all for tuning in. And as always, we're here to teach you one new concept every single day. Today, we're talking about market structure based trading. Forget about indicators, forget about any strategy, forget about the price action tools that you've learned, forget about everything. I'm going to teach you something so simple. If you know about this, and 99% of the people in the market know about this, but you've never used it. That is something what I'm going to tell you about. So if you like such content, educational content, hit that like button, hit that subscribe button, click on that bell icon and leave a comment. I will love to read what you have to say about us. So I'm here to talk about market structure based trading. So this is about Dow theory, and I tell all of my mentorship clients, and I tell them that if one day you wake up and you forget everything exists in life, you must be a wonderful trader. But let's say you wake up one day, forget everything about the markets, and if God gives you one thing that you can remember, and that has to be Dow theory. Himalaya said that again and again. If you know 6 principles of Dow theory, you can never go wrong in the markets. And I'm telling you something honestly, Dow theory has been there in the markets for the last 100 years. It's the most underrated thing. Everyone knows what it is, but still no one wants to read about it. And for in fact, every night before I go to sleep, I always revise the 6 principles so that I don't make that same mistake again and again. So what is structure based trading? It's very simple. I'll say it to you, you will know it, but you still will not use it. What is a structure-based trading? Structure basically means, is the market bullish or is the market bearish? Because if the markets are bullish, your strategy in the markets are to buy on every dip. And if the markets are bearish, your idea is to sell on every rise. Everyone knows this. But the question is, do you do this? Okay, let's say 50% of the people do this. Not a problem. What is structure? Structure means uptrend or downtrend. Everyone will know this. Uptrend is what? Higher highs and higher lows. What is the downtrend? Lower highs and lower lows. Everyone knows that. I would say in every book, in every mentorship or training that you take, this is the first thing that you learn. But do you ever use it? Mention in the comment section below. I really want to read what is the consensus of the people watching our videos, because all I know is that we have mentored about 1,000 people now in the last couple of months, and what I get from people is, can you tell us a trading strategy? Can you give us a trading system where we can see some indicators telling us to buy, where some price action strategy telling us to buy? Everyone is after some kind of a holy grail, but no one really wants to pay attention or pay focus to what the markets want to tell you. And I'm going to tell you something very simple. Markets give you that information, but you as individuals, you as retailers want to get trapped. You want to look for opportunities every single day to buy or sell, but you ignore that information. So I will show you this on the intraday chart, 15-minute time frame, and I will show you this on the one-day chart. So you can, whatever trader you are, whether you are a long-term person, whether you are a short-term trader, you will understand the concept. So guys, let's get started. Let's not waste too much time. Let's not waste too much time. So what is an uptrend? So if you already know, bear with me. We'll just revise the concept and then we can get into the practical application of this. Uptrend basically means that markets are giving you higher highs and higher lows. Understand this. This was the previous high. Markets are giving you another high. They are giving you another high. So as long as the higher high sequence is maintained, you are bullish. You cannot go short here. You cannot go short here. You cannot go short here, because if you go short there, your mentality is trapped. There's something wrong in your mentality. You are a scalper who really wants to go for this profit. But what really happens is, when the markets go down, you become greedy. You see that green figure, you hold the position, and what happens? Markets stop you out. Because when in an uptrend you want to sell, you are only going for this much profit. Whereas if you go on a buy on dip structure, you are going for this entire movement. And that's what I call rubber band snap. Go for the big movement, guys. You all heard me say, like, investors make money. For example, Warren Buffett, how does he make money? He finds a good stock, he stays in the stock and marries the stock. I am not saying you do that. You might not have that much capital to go long-term investing, but even if you come to an intraday chart, if you are seeing a trend, follow the trend. Don't go against the trend, because the trend is your friend. So what is an uptrend? Uptrend means the market structure is bullish, meaning higher highs are maintained and higher lows are maintained. As long as this is being maintained, you are bullish in the market. Your structure is buy on dip. When will the structure change? When will the chart change? It's very simple. If markets give you something like this, they give you higher top, but then they fail to give you a higher top, they give you a lower top, and this was the last low, and then they give you a lower bottom. So if markets then giving you, after a series of higher high, higher lows, if the markets are giving you a lower high and a lower low, that is one signal where the markets have topped out and they want to go down. So that is a signal where your buy on dip strategy will turn into a sell on rise strategy. This is exactly what the Dow theory principle number 2 tells you. Go follow the primary trend. As simple as that. And people don't read. They want to go for that holy grail. So I will show you practical application how our community took a trade in ITC on Friday. The trade was given by Tanay Jatani. Hats off to you. Absolutely phenomenal trade. I'll give you my way how I took the trade and how you could have taken the trade, and we'll come to that in a bit. So this is the charts of ITC. Look at the 15-minute charts of ITC. I have the ITC chart here and I have the ATR, average true range indicator. Forget about that. It's an indicator. It's always on my screen for most of the time. But see what's happening. Markets gave you a top over here. Correct? Markets gave you a top over here. What was the next top? It was given over here. It's a lower high. Correct? Perfect. What was the low? The low was here. So you can see this was the high. This was the low. The second high was over here. A lower high and a lower low. I hope you be with me. Again, you got a lower high. You can see successive lower highs and lower lows. Again, a lower high and lower low. Finally, lower high and lower low. So in this entire 31st, 30th December market, you could not have gone long on ITC. If you went long on ITC, you are just coming into the market and making a fool out of yourself, because FIIs want to trap some people. They are literally finding clients like you and me to trap. And if you are not patient enough, you are going to get trapped, and you will come and say that I have lost so much money, because you don't follow the basic principle that you learn. This is technical analysis 101. Seriously. Now, this was the market structure. It was a downtrend. It was a sell on rise structure. So on every rise, you had to make a short. Now, look what happened after 31st, what happened on 1st. This was the previous high, correct? If the markets wanted to be down, they would have stopped over here and then again fallen down. But on 1st of December, markets broke this high and gave you a higher high. This was one signal that the markets were giving you a change in a structure. So from a lower high, lower low, you got for the first time to yesterday a higher high. Now the question is, are you also getting a higher low? And let's see about that. Markets, this was the previous low. If the markets were bearish, you would have got a low somewhere below that or somewhere around that. But our low was over here. This is a higher high and a higher low. Structure has been changing. 15-minute change of structure from bearish to bullish. This is the time where you have to change the bets and become bullish in the market. And if you see at this point of time, when you got this breakout at this point of time, 211 at 12:45 p.m., this was the area where on this breakout, you had to go long in the market because the structure has changed. Have a look at this. This was the previous high. And if you look at the average true range at this point of time was a 60 paisa, 60 cents as you all call it. Is this candle more than 60 paisa? 210 from 0.75 all the way to 211.85. It's roughly about 1.2 rupees. So it is much more than your ATR. So the trade is good. Forget about ATR. Let's say you don't know ATR. When this breakout happened, was there good volume here? Yes. And another Dow theory principle number 5, volume must confirm the trend. Satisfied. Furthermore, forget the volume. If you don't know volume, no problem. A lot of people come to me and say, this candle is too big. How can we take a trade? Don't take a trade, because if you take a trade on this candle, the SL will come here. It's a big SL. What you could have done is wait for confirmation. Can you see an inside candle and a breakout over here? If you don't know what inside candle is, see our sniper trading series on YouTube. Another signal to buy here, and SL would have come over here. Again, you can see at this point also markets gave you an inside candle. You had tons and tons and tons of methods to trade. So if you knew what the structure was doing, you could have made the trade. How difficult is it? I have no indicator on chart. I'm not looking at anything. Just by looking at structure, I have just chopped down a trade for you. And these are the things that happen every day, every single day, on an intraday chart, on a daily chart, on a weekly chart. I'll show it to you. So bear with me, because if you know this concept, trust me, you will change the way you trade psychologically and economically. Furthermore, look at the volumes. Another very big confirmation when the trends are changing is the volume. When this trend was down, what does Dow theory say? Dow theory says something very simple, that the volume must confirm the trend, which means that if the price is falling down, the volumes must be high. I've done a video on volumes quite a lot of times. So go to my volume videos on YouTube and have a look at that. So you can see over here, when the trend was down, when the markets gave a shot, you had huge volume. When the markets went above and made a high, did you have any volumes? No. That's a signal markets are looking to go short. When the markets again fell down, did you have volume? Yes. When the markets went up, did you have volume? No. This is a divergence in the sense that the markets do not want to go up. Again, look at this. When the markets went down, did you have good volume? Much above the 20 MA. And when the markets are going up, there is hardly any volume over here. Now, the trend was down. So on every fall, we saw a good successive increase in volume. Now, when the trend was reversing, let's have a look. Now, when the trend is reversing, you can see after this point of time, look at the volume. Now, when the markets were falling, was there any volume? This is another inside signal you are getting that markets don't want to go down now. And when the markets broke out, can you see successive increase, rise in volume? So you can see how trends are changing. It's very simple. Nothing difficult about it. Trust me, guys, people don't understand what is technical analysis. Technical analysis is what? It is basically two things or three things. It is analyzing price, analyzing volume, and analyzing your open interest. If you know how to do these things, you are good to go. You have to learn nothing else. Price action and all is a secondary thing. All those things are basically after this. So what people will say is a trend line breakout. All those things are derived from what I'm teaching you. I hope you're understanding. What is price? Candlesticks. You need thorough understanding of that. Something we have explained, the structure of the market. What is volume? I don't think I can explain any better than that. Open interest for your derivative segment. If you know these three things, you're good to go in the market, guys. You're good to go. Let's look at one more example. Snowman. A lot of people have been asking me, I want to show you trades that I have taken, which you know I have taken. Otherwise, I'm just talking out of the air. I don't want to talk out of the air. I want to show you why I have taken particular trades. Snowman is one trade people have seen is gone wild in the market. And you have seen FSL 50% return, Snowman 40% return. Why did we take these trades? What was the reason in the first place? Look at the weekly chart. That was intraday, now this is long term. On the weekly chart, what was the structure? Downtrend. Lower highs, okay, and lower lows. So the structure of Snowman for the last 5 years was down. Perfect. The company is not good, it's not profitable, I totally understand. But obviously, there is always a turning point that comes in companies. With this COVID-19 theme coming into play, this is actually chosen. I think even Bank of America has covered it. They were chosen to, they are the carriers, I would say, and they are responsible for logistics and transportation and refrigeration of the vaccine of Pfizer. So things really turn. And markets, they don't wait for news. In 2019, this was nothing to be there. There was no COVID, but markets were giving you a signal. How? They gave you something we call a double bottom reversal. And you can see over here, if you don't double bottom, forget about it. But you can see over here that after successive 5-year downtrend, this was one time where you got a higher high for the first time and a higher low for the first time. And this is a signal that really that markets now do not want to go down. The trends have changed. they have evolved. This is how basically we have been identifying trades. If you know this, you can find out really, really good trading ideas. And within just a couple of hours, I will upload another video and I'll give you a very interesting trading idea for a positional trade. So make sure you hit that bell icon so you know when that video is out. So if you like this video, guys, that's it for now. If you like this video, comment on it, show some love, and I would really like to hear what you have to say about it, and like on that video and share it with your friends. That's what's important. Share it as much as possible so people can learn. It's about learning. I don't want people to get misguided. Let them learn and they can succeed. And we are there for you when it comes to learning. Thank you so much, guys. Have a good evening.